Everyone's panicking about Bitcoin right now, and that's exactly why I'm buying more. If you asked most people about Bitcoin 2 months ago, you would have thought it was the greatest asset of all time. I mean, it was basically green for all of 2025, it had just hit a bunch of new all time highs, and the price predictions were starting to get pretty ridiculous. I mean, you had some people calling for 150K by the end of the year, some were saying 250K, and you even had some calls for $500,000 Bitcoin by Christmas. And during this time, everyone was buying, and the sentiment was pretty euphoric. But then out of nowhere, Bitcoin crashed, and it's been sitting under $100,000 for a few weeks now, with sentiment having done a complete 180. Fear is the highest it's been in years, and the same people that were calling for all those huge price predictions are now panic selling and asking if Bitcoin is ever going to recover or if the bears were just right all along. So, what actually happened? Did something fundamentally change? Is Bitcoin just an overpriced Ponzi scheme? Or is this just short term noise and maybe even a rare opportunity to buy an undervalued asset while everyone else is running scared? So, today I'm breaking down why Bitcoin tanked, what hasn't changed at all, and why I'm personally using this drop as a chance to stack even more instead of panic. So, how did Bitcoin go from all time highs to dropping over 30% in under 2 months? Because this isn't the kind of move you normally see with real estate or the S&P 500, but with Bitcoin, this is honestly pretty normal, and there's a few real reasons why. First of all, Bitcoin is a high beta risk asset, which means that when the market's feeling good and everything is going up and people are chasing an upside, Bitcoin is usually one of the first places they'll go for a higher return. But the opposite is just as true when things start to go down. When things are feeling shaky, Bitcoin is usually the first thing people dump from their portfolio. And right now, we're seeing fear spread across the entire market, which a lot of that's coming from the AI trade. And people are saying right now that we're in an AI bubble because too much money has been invested into these AI companies, and people are saying that they're not going to end up being profitable. So people are wondering if these companies will actually be able to return on what they've been priced in at. And that shift in sentiment hits Bitcoin immediately and makes it the first domino to fall. The second thing currently affecting the price of Bitcoin is all this uncertainty around the Fed's meeting that's happening this week. People were initially expecting rate cuts because the job market has been weakening, but inflation has been stubborn and is still affecting people all over the country. So if the Fed cuts too early, inflation could flare back up, but if they keep rates too high, the economy will stay tight and unemployment will keep rising. So right now, no one really knows what they'll do, and the market is worried they'll keep rates high and hold back on that easy money. So the third reason is that all of this has triggered a classic leverage wipeout. I mean, we've had a lot of people trading with leveraged positions, and that first small dip forced the first round of those leveraged traders to get liquidated, which forced even more selling, which then triggered even more liquidations. Next thing you know, this is all snowballing, and then all of a sudden you have a 30% dip in Bitcoin. And this is not because something has fundamentally changed about Bitcoin, it's just a market chain reaction. Now, despite all of this volatility and all the decreased sentiment around Bitcoin, I think it's really important to remember that Bitcoin's fundamentals haven't changed at all, whether it's $80,000 or $125,000. All of the core rules are exactly the same. First off, there's only ever going to be 21 million Bitcoin, and that supply schedule is built directly into the code. Now, the scarcity alone doesn't guarantee any price increases, but assets with a truly fixed supply do tend to respond very strongly when the long-term demand grows. Another one of the core values of Bitcoin is that no one can just go and print more of it. There's no CEO, there's no company in charge or government that's overseeing it, and that can just wake up one day and decide to dilute your holdings. Bitcoin's supply cap is a part of its DNA, and it cannot change unless the majority of the network agrees, which is pretty much impossible when that would just dilute everyone's savings. Bitcoin also has a halving cycle every 4 years, and while once again this doesn't magically send the price to the moon, it does cut into that new supply that's entering the market, and less supply means that there's going to be tighter liquidity, and historically that's mattered a lot over the long run for price increases. And to top it all off, adoption just keeps increasing. Every month you see new individuals are buying it, new companies are getting exposure, and even S&P 500 players are holding Bitcoin in their balance sheets. And as adoption rises and that supply stays fixed, it creates a pretty powerful long-term dynamic. Meanwhile, the US dollar continues to get debased through the normal monetary policy. Every day, every week, and every month, your dollar buys a little bit less when you go out to the grocery store. And Bitcoin reacts to that because it's the exact opposite. It's a fixed supply asset in a world of ever expanding currencies. And even if you don't care about the philosophy behind Bitcoin or the decentralization of currency, the fundamentals are still the fundamentals. You're not betting on a company that's going to innovate or release a new product. You're just betting on the system, which is that Bitcoin is a scarce digital asset with global liquidity and a predictable supply schedule. And when you combine that fixed supply with rising adoption and the halving cycles, that is why I'm confident Bitcoin will continue to perform over the long term. And for a long time, Bitcoin has been seen as this sketchy internet currency and basically something that was destined to go to zero and only appealed to people willing to gamble on what appeared to be a pyramid scheme. But I think things are very different now. I mean, you have multiple S&P 500 companies that hold Bitcoin in their balance sheets. It has a fully regulated ETF that you can buy in your standard brokerage account. And I think most people could agree that today Bitcoin is past the point of realistically going to zero. Now, obviously, this isn't financial advice, but here's my perspective as a 25-year-old. I know that I've got time on my side, and I already have a strong foundation in all of my retirement accounts, which have a mix of low cost index funds and diversified ETFs. So, even in the worst case scenario for whatever investment I have, I think I'll still be okay. And that's why I use Bitcoin as my asymmetric bet. The downside for me is limited because how I've built the rest of my portfolio, but who knows what the upside could be over the next 10 or 20 years. So I'm not trying to time the bottoms, I'm not trading in and out of Bitcoin, and I'm not here to gamble. I'm simply dollar cost averaging and letting the volatility work for me instead of against me. So yeah, in the short term, Bitcoin is going to have pretty big drops like what we're seeing now, but that's just part of the game. And over the long run, I'm confident that this will be a big booster overall to my portfolio, and that's why I'm continuing to buy throughout the fear. And just to be clear, I'm not telling you to throw your entire life savings into Bitcoin. But for most Gen Z and millennials, I think something like a 2% to 5% allocation does make sense because it's a small enough allocation that a crash is not going to destroy you, but it's also large enough that it'll motivate you to start learning more about the asset and just paying attention to what's going on in the market. And even if Bitcoin did somehow collapse tomorrow, a 2% allocation barely dents your portfolio. I don't think Bitcoin is some get rich quick scheme anymore, and from here on out it should be treated more like a highly volatile version of the S&P 500, where you just make slow and steady contributions over time. And even a small allocation gives you access to that upside. Look, short-term prices are just noise. What matters are the fundamentals, and none of those have changed. Bitcoin supply is still capped at 21 million, the halving cycle is still intact, adoption is still growing, and it's still the hardest money in a world where every major currency is getting debased. Historically, the best opportunities show up when sentiment is at its absolute worst. When everyone is panicking and asking if it's over, that's usually when you should start paying the most attention. So I'm stacking small amounts through the fear, just like I did during the April dip, and just like I'll do during the next one. And if you're just getting started or have any questions about this, drop a comment, and I'll see you guys in the next one.